Welcome to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And today, we're talking about cryptocurrency and the implications it can have on your taxes.
Don't think that this one asset class is going to become your savior in the scenario. You need to be looking holistically at your entire portfolio of what you're doing, including you as an asset. Like that's an important concept for people to know.
Don't hold your assets personally. Hold your assets through a business entity. Treat it as a business.
Hey guys, today we're going to talk about crypto. Bob, you got a certification recently that we would love to hear more about. And I think our listeners would like to hear about what it means to hold crypto, sell crypto, and the impact it can have on their taxes.
Yeah, Bob's a DeFi master now. I look. You had sent that over to us. Because you were excited about it.
Very
and I
excited.
looked up that certification, and it was like, oh, it's a very intense, long. I was like, oh wow, it's not. This is not like a, just get it over the night, kind of mastery. And I think it's a really interesting topic. So many people are talking about this, and I'm certain that doctors. Crypto is just like this really sexy topic to talk about. People who are into crypto are really into crypto.
Mm-hmm.
It's like, want to know how someone has crypto in their portfolio? They'll tell you immediately.
That's right.
It's like it's kind of a fun topic to talk about. It is a new thing, in the last few years. The concept has been around for a long time, and Bob, I know you'll dive into some of this as we talk about it. But it's also really, really volatile. Currency, that currency can be really volatile. I had a friend who he was kind of, I'll call him like a prepper, and so he had lots and lots of gold that he had amassed over the years. Like I'm talking about probably $700,000 or more in gold. And he was convinced that crypto is the way to go. He literally sold all of his gold, bought all into Bitcoin at the peak of Bitcoin, and then gold, as we know, recently hit its all-time high. I forget what it was, 2,400 or whatever it was. Gold hit its all-time high, and that crypto had gone down. So he lost probably 30% of his portfolio and missed out on that increase. So it's a crazy, crazy world. I cannot wait to hear kind of some of your insights, Bob, into how this can impact, our members and certainly any of the doctors who are listening.
Yeah. Well, crypto's an asset, but it also is a technology, and I think that's what a lot of people don't understand. When you hear different things communicating about Web3, that's crypto, that's blockchain, that's all the technology behind the scenes, and it really has revolutionized technology, just as how the internet came about and revolutionized technology, just like how Bluetooth and all these different things that have come out over the last few years, and it has certain implications to us because it also has a financial value to it and that currency value. And it's interesting because we don't talk about it as crypto assets, we don't talk about it as crypto investments, we talk about it as cryptocurrency. And so therefore, you need to link it to other types of currencies, such as the dollar, the yen, the euro, blah, 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 blah. And there is an entire world of Forex, which is foreign exchange securities, and you're buying and selling in the exchange of currencies. Cryptocurrency is no different, but it is an entirely separate world. But it does provide, to your point, Joe, very similar risks to how stocks, bonds, mutual funds, in owning penny stocks versus altcoins. Owning, meme coins is like penny stocks, and so there's a lot of similarities. And so let's take a step back to the beginning understanding of assets. It's an asset class. Period. It's an asset class. And so with any asset that we've discussed, an asset is something based on Robert Kiyosaki's very simple definition that appreciates and creates income. Now, the type of income, whether it's investment income, W-2 income, capital gains income, it does not matter. It appreciates, it gets sold, creates some kind of value in return, hopefully more than what you had before than versus Joe's story of his friend. But there is a lot of volatility. And with that as a result, there is a taxation on the valuation of that asset. So it appreciates, you sell it, you made more money. Guess what? There's a tax consequence to that. No different than penny stocks, real estate, business. It's all the same. It's an asset class. The opposite is true on losses. But on an individual tax return, the max losses that you get to claim each year is $3,000. The great thing is that you get to carry forward your losses and be able to use that $3,000 a year. Hopefully you're young enough to be able to capture all those losses on your tax return. But there's a very simple fix to that, and we've talked about this before on other episodes. Don't hold your assets personally. Hold your assets through a business entity. Treat it as a business. Every asset class that we hold, we should be treating it as a business, no different than we do with our true business, our job as a W-2 employee, or whatever. We need to be able to go into these assets with our business owner cap, and this is a separate business, and I'm focused on this. And if you don't, and it becomes a hobby, you don't know what you're doing, you're going to lose money. You may get lucky and make money too. That's perfectly a viable option when it comes to things that are like assets.
But it's like you could go to Vegas just the same and probably have similar odds, right?
Yes. Now, if you know what you're doing and you've studied and you've learned about that particular asset class, and this conversation is about cryptocurrency, and you've learned about Bitcoin, you understand the ins and outs. There's a ton of great material online. Really good YouTube guys who just spend their entire time talking about this stuff. No different than all other assets. So there's a plenty of information to gather knowledge to make educated decisions. But just like with most assets, you can't accurately predict it with a guarantee of what it's going to do. You can get close to that by understanding how charts work and understanding that type of currency, right? But there's no guarantee.
I think one of the things, so I'm looking at a chart right now that's specifically Bitcoin over the last 6 months. It's got it's down 16%, and it's been up, it's been down.
Yep.
And I think that is, like, for example, my friend who's gone all in with Bitcoin, he's going all in not to make money. Like, that's not what his goal is. He's in Bitcoin for a totally different reason. He thinks that there is going to be a massive crash, and it's like that's the only thing that's going to hold value. So when he's down, he's buying more. Like, so it's kind of this all in, like, I'm just full blown philosophy around it. And I think probably, Bob, that's what you're saying. Like, there's a lot of those educators on YouTube. Knowing who to listen to and who not to is difficult at times because people get really myopic. Like, I listened to a guy, went to a 4-hour presentation by this guy who's a bit, early in Bitcoin. It was pretty interesting and it had me pretty convinced, but literally within a week, Bitcoin went down $7,000 per coin. And it's like, well, and he was like, you shouldn't have any other coin. Like, no, any other coin is a trash coin is what he'd call them. And so it's like, it is hard to know, like, who to listen to if you're going to do this. And I think one of the things that comes to my mind with this kind of volatility or really investing in general, if that's not like your full-time focus and your skill set, what are you doing? Like, focus on what you do well. Be a great doctor, progress forward in your career rather than investing this time to try to game the market. Like, I don't know. I have different beliefs around it, but I'm curious, like, so for the average doctor who's sitting there in surgery and they're listening to their other surgeon buddy talking about how well crypto's done for him, like, what would your advice, Bob, be to that doctor who's like just kind of getting exposed to crypto and thinks that he or she should just like go all in with it?
We're pretty consistent. It's like all other assets. It really is. You need to know what you're doing. Now, certain assets have a little more risk and, to your point, volatility. But if you look over the last year with Bitcoin, it's up 113%.
Right.
Now, you talk to certain people or you listen to certain people, they're of the belief that Bitcoin's going to hit over 100,000. If that's the case, it's at 55,000 right now.
And they're saying that by the end of this year, by the end of 2024, they're proclaiming it's going to be over 100.
But they've said that the last couple of years, and then it dropped to half. So just like with all assets, right? Oh, you need to be in commercial real estate. You know, it's renting space to businesses is the best thing. Well, the COVID happened. And today we're hearing right now that there's this huge commercial loan bubble that is about to burst, because when you look at certain downtowns, I saw a YouTube video, whether it's accurate or not, but it seemed they made some really good points. Every downtown in every major city, down on the ground level, it looks like things are bustling, right? You got retail, you got restaurants, you got all this stuff. But once you go to like level 3, 4 and higher, all vacant.
Wow.
I could probably agree that that's probably accurate or very close to it, because of what COVID did was drove everybody out of there. Companies reduced their expenses of these A space. High rises are A space. They're expensive. But now all of a sudden you have all these assets not generating revenue. That could be considered risky, couldn't it? Right. It's not cryptocurrency. It's what everybody says you should do. But that's kind of the point, is that you kind of got to look at what's the end in mind. What's your goal? What do you want to accomplish? What fits you? Don't listen to the guy who's in the cafeteria at the hospital or in the surgery or your golfing buddy or whatever. You need to do your own homework. This is why they're called dumb doctor deals, is because there's no homework behind what action you take, and it ends up, something negative ends up happening. You don't hear about great doctor deals, right? And it's not because they don't exist. They do. But that's the expectation. When you put money into something, I'm going to make it. That's the expectation. So you don't go around bragging to everybody. When people do that, it's because they got lucky in a asset like crypto, tell their buddy, and then what happens? It goes down, because the lucky guy doesn't know the volatility. They didn't experience it. They experience luck, right? Right. You can reduce your luck, increase your positive outcome with any asset class by understanding what you're doing, why you're doing it, but how you're structuring. And the main point of all of this is the taxation of it. If you're going into something that is volatile and there is the potential of having a loss 1 year to the next, and you want to be able to write off that loss, if you're holding it personally, you can only write off $3,000. Period. So it makes more sense into something that's volatile like this to hold it into a separate entity, just like all assets, which is what we recommend, and a lot of tax planners that are really good in understanding building wealth and tax strategies is to do that, because that's how the tax code is written for businesses, because it's basically you are taking a educated step in a direction that the IRS wants you to take, and you're saying, I'm going to treat this as a business, not necessarily a hobby. And if you don't treat the business as a business, the IRS will say, it's a hobby, because you're not treating it as a business. So there's certain criteria and necessity that you have to do to treat this entity, this business, as a business in order to get the tax benefits. You don't get everything for free. So I think on the crypto side, it's very similar. And again, let's make this very clear. We're not giving investment advice, right? We're not telling you what you should be doing, what you shouldn't be doing. This is literally just educational, informational purpose only. There is zero advice here in telling you what you should or shouldn't do. We're not telling you to get out of crypto. We're not telling you to get into it, right? Education, informational purposes only. All right, there's our disclaimer. With any currency, including stocks, bonds, mutual funds, as well as real estate, you have the ability to hold these assets and bet on these assets when they go down as well. You have the ability to hold these assets and lend these assets out to other people and make money on this. The assets work the same across every asset class on how you make money from them. It's the structure, it's the steps, it's the type of value return you get that's different with each one. And so it's very important to understand. You hear people shorting stock. And we've heard that people make a lot more money betting that a stock's going to go down, which is what shorting a stock means, than betting the stock's going to go up. So you can do the same thing with crypto. So your friend could have done the same thing with his Bitcoin, hedged his losses, and he would have made probably 3 times more on shorting Bitcoin than just sitting there and going, let's ride this baby. Mm-hmm. But how do you do that? You got to learn how. You got to have that knowledge. So I think that's the biggest takeaway from here, is that I don't know everything, but I do know I need to learn. I do know I need to go learn from other people and vet other people, but not also take all of their word as gold, as God's voice to my ears, and that's what I should be doing. Right? It's information, just like what we're doing now. It's information to help you take a step for you to decide, is this what I want to do? Now, how do I want to do it? Just like any decision in doing anything. And as a doctor, you did the same thing when you wanted to become a doctor. You went to school, you got your 4-year degree, you decided you wanted to become a doctor for sure after taking all your science classes, and you started applying for medical school. You had to decide which medical school you were going to go to. You had to make these decisions then. Why is every other asset class different? You did it for you as an asset class. You're an asset class. You're generating and you're appreciating value and you're generating income. You're an asset. So why do we think all these other asset classes should be treated differently? No, it's all the same process. It's all the same process.
What would you say was your biggest takeaway, Bob, from the certification that you went through? Like, what were the biggest ahas or just things that were like an epiphany to you?
What I didn't know, and I thought I did. Listening all to these YouTube guys and I've probably spent about 2-3 years. My brother-in-law is really into crypto and all this kind of stuff. So he sends me a bunch of videos, and there was probably about, I'd say, 7 to 10 YouTube channels I would have watched regularly. I don't anymore, because I realized that they're all saying the same thing, and they're all predicting Bitcoin, as an example, is going to go to 100,000, and then it went down by half. And my aha moment at that moment was, oh, it's like every other asset. Okay. But Going through this certification is, wow, how similar it is, a process, like I was explaining, to other assets. Wow. The other side of the coin, I had no clue about. No clue about. And I'm not saying I know everything about it. My aha is I've scratched the surface. And it is a 4D world when you're talking about cryptocurrency, because it's new, it's evolving, it's created an entirely separate new type of technology that's evolving on its own. And why I say 4D is that crypto, the blockchain, literally you can create these virtual worlds. This world that does not exist, and we could literally make Earth virtually and do everything we did on Earth physically virtually. It's like, whoa, hang on a second. I don't know if I have the brain capacity on a Friday morning to be able to handle that. Certainly not a Monday morning. Right? So that was really, that's kind of multiple ahas, but I kind of lump them together. Was like, wow, how much I just did not know and how much more I need to know. And the realization is like, it is like pretty much every other asset class we talk to. So we've talked about organization, order of assets, don't put the cart before the horse, right? So this is our planning process. And I would say crypto is probably one of those last things you would want to look at, unless you have a philosophical difference, because, you're prepping, you're the end of the world. We want something that's decentralized, away from the central. That's a different conversation. You're not investing now. Right? That there's a difference in understanding what your outcome and what you want to do. It's like I tell non-real estate professionals, W-2 doctors, don't expect to get all the same tax benefits out of real estate that you hear on these guys on Facebook and all these other courses. They are real estate professionals. They get all these tax benefits. You may not. So don't have that expectation. And understand that pre-COVID and post-COVID, some of these strategies with real estate have changed substantially. Right. You got to know that. And if you don't know that, you're experiencing it right now. And so again, order of assets, don't put the cart before the horse. How do you know if the cart's before the horse with you? Well, that's what we do with our members. That's what we do in the discovery process. That's what we do as we bring members on. We look at your situation. We go through this freedom roadmap and figure out what your goals are, what you want to accomplish. And we make sure everything you have is in order to that and things that we need to add to help you get to that.
So what can you talk briefly, if they touched on this, like the tax implications? So I invest in crypto. I buy Bitcoin at 50 and it goes to 72 and I sell it all at 72. Am I taxed on that? How does the government know that even happened?
Yes, you're required to let the government know. In fact, on the new tax forms, they ask you, have you put any money into crypto? There was a period of time where the government did not ask it because I think the government really didn't think it was something. And then it started becoming something when the government started talking about creating its own decentralized,
right.
Digital currency. And all of a sudden you had these billionaires starting to jump into it and what we call whales in the crypto world. Right. All of a sudden it's like the IRS is, oh, hang on a second. There's people making a ton of money and we're not getting ours.
But it's this is an honor system thing right now. There is no tracking of what you've made, what you've bought, what you've sold.
No. That is totally incorrect. It's like with any other asset, it is not. Everything on your tax return is honor system, everything. But if you're, for example, Coinbase, you're going to get a 1099 from Coinbase. Coinbase is required to report to the government what's happening. So you are required. It's not honor system. You are required to do it.
Wow.
If you don't, you could get penalized.
I mean, that's only if you're holding it in a system like that. If you hold the currency physically yourself, that is one of my understanding is the biggest benefit of this type of thing is it is 100% untraceable. Like you don't even know who, like, I don't know if they talked about this. There's some Bitcoin buyer that's been buying this massive volume every single month. It's the biggest, and they don't know if it's a country. They don't know if it's billionaires. It might be Elon Musk. Like they don't know who it is. I think his name is like Mr. 500 or something like that. It's like nobody knows who it is. It is totally untraceable. So if you're physically holding the wallet yourself, then it's not like there's no reporting on Coinbase. It's like just yours.
Blockchain is completely transparent. Everybody, that's the point of blockchain, and the point of it is every transaction is transparent. Who holds that address may not be.
Right.
But I am telling you right now, do not go with the mindset that it is the honor system and that you do not need to report this.
Right.
Because once the IRS finds out, you're going to learn
really quickly how transparent it was.
Yes. So it's very, very important to treat this like every other asset. You have short-term capital gains, you have long-term capital gains. The tax code and the way it taxed on the tax returns, all the same like all other assets. But do not go through this process of, ooh, this is secret, so I don't need to tell. No, don't do that. Just don't do that.
Right. Good advice.
That was a question that I had in my head the whole time he was talking. I'm like, I'm not sure if I should ask that on our podcast. So I feel like it took us a little while to get to that. That is probably on a lot of people's minds if they do hold crypto or if they're thinking about holding crypto. And I really like the point you made that it's like, what is your end goal with it? Is it end of the world type in almost an insurance policy, or is it like, I want to make money in this asset? So that's a really important question to consider.
Yeah. And end of the world that we still have electricity and access to the internet.
Yeah.
Right? So it's not really the end of the world.
Correct.
Right? It's the end of how we have the world today, but I still have access to that stuff. But it's
Right.
not like gasoline. End of the world, gasoline is going to be more valuable than crypto if you don't have access to your crypto.
Or cigarettes and
Or
vodka.
cigarettes, right? Yeah, we're going to prison, baby.
No, it truly is. I've thought about that a lot, Bob, and I've talked to enough people who are of the prepper mindset where it's like there are alternative approaches that people have to this. One of them being like true, like end of the world as we know it, some kind of like solar flare, and it knocks out all electricity, and therefore crypto is like obsolete because there are no computers. But then there's other ones that are a little bit, more nefarious, from like a government takeover and controlling everything, and where electricity still is important to all of that system. Yeah. So I think that's exactly right. It's like, and it goes back to what you said in the beginning, like, what's the purpose of this asset? Yeah. What's the purpose of this asset that you are holding on to? And secondarily, do you have enough information for yourself to feel good about where you're going with that?
And the same would go with gold or any other precious metal. I mean, if you're not holding gold directly, it's through an exchange. You don't own gold.
Right.
I'm sorry. You owned it just as much as you do crypto or any other stock. Now, if you actually have gold bars or gold at your house and the end of the world happens, what is the value of that gold? It's not what you thought it was. The value is what it's going to exchange for. So you may send an entire gold bar to get a gallon of water to save your life. There's the value of your gold bar. Now it's a gallon of water.
Well, you know what's interesting though is I was reading, I think it was in the book Money. I think it was just called Money. There are a few really fascinating concepts that are talked about in there, but they talked about gold, and a 1 ounce gold coin in Roman times would get you a tunic, shoes, and a belt.
Yeah.
And they're like, how much would it cost to buy nice suit, belt, and pair of shoes? About an ounce of gold, like $1,300, $1,400 for a nice suit. And that blew my mind. They're like, over 2,000 years, gold has actually held its value for what it's actually worth in the world. We put inflated values or deflated values based on like immediate circumstances. But it's like, you're not going to trade an ounce of gold for a gallon of water.
Yeah.
Unless it's required to save your life, in which case you'll trade all of your gold for a thimble of water. You know what I mean? It's like, so it really is. And I don't think we need to take the podcast right now in that direction of the end of the world. But I do think because that is prevalent in so many people's minds, this is one of the motivating factors for why people believe in this. And so I think it's just got to be addressed. And Bob, your input is really appropriate. Don't think that this one asset class is going to become your savior in the scenario. You need to be looking holistically at your entire portfolio of what you're doing, including you as an asset. Like that, that's an important concept for people to know.
Yeah.
Well, thanks for sharing your knowledge.
Of course, that was fun.
And I think one big takeaway from this too is that, Bob, you are just someone who's constantly learning new things. You are hungry. You're just such a wealth of information. And so I think that's really comforting to our members and our future members to know that, like, there's so many people out there who just go all in on one area and they're like, no, this is the way. And you're like, it's an asset, and I'm increasing my knowledge so that when our members, we have some come in and we see they've got a whole crypto area of their portfolio, but then others do not, but they may want to. And so you are able to at least give them some input,
Yeah.
Whereas other people probably like my financial advisor, for example, like, nope, we don't touch that. Well, I mean, we're interested in it. So who should I talk to? So again, we bring the whole picture.
I think the best way to visually understand this from an analogy perspective is it's those old dot to dot pictures, right? Where you have all these dots and they're numbered 1, 2, 3, 4. But what if they're not numbered? How do you know what this picture looks like?
Right.
Where does my line go from what dot to the other? Now, the very basic ones, you're like, oh yeah, because you got a dog's nozzle right there, the nose right there. So I know that's a dog, right? But if they didn't cheat and give you the nose and the eyes of the picture, how do you know which dot to connect?
Right.
And everybody's connection, everyone's dots are different. Meaning what they want out of it. So imagine a dot to dot where your lines connecting the dots create the picture for you, but all the dots are still in the same spot for the next guy. But we connect the dots differently. And that's what I wanted to be able to build, because I realized there was no dot connectors. Right? Maybe we change the name from asset coach to tax strategist to dot connector, right? How cool is that? That'll bring up questions.
You know what? I've got a buddy who talks about that. He's a pastor, and he said, my job is to collect the dots and connect the dots. Yeah. And I mean, it's the same philosophy.
Yeah.
I love it. Thank you, Bob. Well,
Sure.
We hope this has been a helpful conversation, and we hope you'll join us next time. And until then, thanks for joining, and go be a wealth maverick.